Hello, my name is Robert. I'm a tax attorney, and I'm going to talk to you about offer and compromise when you make over $100,000 and explain how you still might get it. So, a financials-based offer and compromise is based on a few financial factors. Number one, available income after expenses. Okay. Number two, net equity and assets. Number three, income history for self-employed people. So, they're going to be looking farther back at your income. And people making $100,000 or more often need to have higher expenses to get an offer and compromise accepted. Those expenses just need to be deemed reasonable unless that amount owed is like really big. Like if you owe, like 500 grand, maybe $1,000,000 and you make 100 grand, the numbers still might not work out in the IRS's favor when you do the calculation because the IRS is looking to see what you can pay by the time the tax debt expires when they are considering whether or not to accept your offer and compromise. And as tax attorneys and other tax practitioners that do it correctly, we're supposed to look at these numbers before we actually submit it for you. Okay, let's talk about available income after expenses. So the IRS uses a combination of actual expenses and estimated expenses. Those estimated expenses are based on the collection financial standards, and we'll post a link to that below. But basically, you got more dependents, you can claim more expenses. And if you got medical expenses that are beyond the little basic numbers that they give you in those collection financial standards, you can claim more expenses for that too. And here's an example. Example one, someone with no special expenses making $100,000 and is single. If they owe $50,000, they're probably not going to be getting an offer and compromise accepted. Here's an example two. If someone with 4 kids is making $100,000 in California, they probably can get an offer on any amount owed accepted. We had a client that owed like $250,000. They had 4 kids. They made like $120,000. They live a little bit north of LA area. And because it's expensive, they were able to settle the entire debt for I think it was like $220 or something like that. So it happens all the time. It's really just about zeroing out those numbers and not having net equity and assets, which we are going to discuss now. So net equity and assets is basically what is available if you sold everything theoretically. And IRS values most of the assets at 80%, and then the available equity for offer and compromise purposes is what is left over. A lot of people who make over $100,000 will have assets that come out to being worth more than the tax debt, even at 80%. A lot of people in California and New York make $100,000, and there's just not enough money left over at the end of the year that they have no assets. So this kind of does change a little bit state to state because there's people that live in other states and they have a lot of money left over and they've built up more assets. But if you do not have any assets, then you really don't need to worry about this part of the calculation. Okay, if you are self-employed, there's a chance they're going to look at your longer term. If you are self-employed, they're most likely going to be analyzing your longer term income history. And we mention this here because a lot of our clients that make over $100,000 are self-employed. And the IRS is going to look at the last 3 years for income averaging. And you can often get them to accept a different number by showing things have changed. Like a lot of businesses have been impacted by the whole COVID-19 thing and really did not come back. You can say, hey, my number is not going to come back. And the reverse can be applied too, where if you're just doing poorly temporarily, then they may say, well, you're just going to come back. We're not going to accept your offer. And a lot of these just require an appeal. And a lot of time, by the time the appeal people comes back, you have more evidence that things have not changed because there's more time in between and they accept your offer. So if you're not really sure what to do, you can always give us a call. Some cases are still worth a shot and you can call us for an evaluation. Some cases, your offer odds are not that good. And we'll just tell you, we really don't care. Get a free detailed tax case evaluation. You can call us at 888-515-4TAX. That's 888-515-4829. Or you can go to trp.tax/start. If we can't help you, we'll tell you. There's no false promises for settlements, and we only submit settlements that have a good shot at acceptance. If you're going it alone, check out our free tax help guide by Googling TRP Tax Help Guide. If you need an answer to a question, just comment on our YouTube channel, and one of our tax attorneys will answer. Thanks for watching, and have a great week.